everyone, and welcome to another Elliott Wave Forecast video day. My name is Eric. Today is the 2nd of May around 5:15 p.m. Eastern Time. And today we're going to take a look at something very interesting, something that's being in the news, which is Twitter. We're going to take a look at Twitter. We're going to provide why the timing of the sale of Twitter is very interesting, and why the buyer is going to be ending with a nice run ahead of him. All right, so as always, we're going to give you a heads out what we're looking at, and eventually this is the 5-way advance in the Elliott Wave theory, and everybody knows that it is in a red grid 1, 2, 3, 4, 5. And everyone knows that when the wave 3 gets extended, there is a 1, 2, 1, 2 scenario that is called a nest in Elliott Wave, and then a big run with more upside in a series of 3, 4, 5 is coming into the market, right? So let's take a look now at the weekly charts of Twitter. And this is Twitter over the weekly chart of the grand super cycle. It trades higher into around the 74 area. It put back in 3 waves. They put back found buyers almost at the equals in 2016, and since then Twitter also makes another new high. We label it in this way in 5. I can put a 1, 2, 3, 4, 5 here, but what it matters is that it's a higher high right here. So when we look at Elliott Wave, eventually the trend is bullish when you have a higher, a lower high, a higher low, a higher high, and now Twitter, since the peak in 2021, it reached our blue box buying area here and reacted in an impulse model. So when we look at the 3-way with the higher high here, I get back to these charts, and I have to say that Twitter is either over here, right, which is technically the same, and this one is with an extended wave 1 due to the overlap that we have here. So Twitter is either now coming into this, is bullish, either way, look at the result. Twitter is here and is coming into this, turning into this, is bullish. This is the extension in the wave 3, extension in the wave 5, in the wave 1, or Twitter is coming here, which it will do an extended wave 1. At the end result of Twitter is going to be bullish. And when I see the reaction in either one of the 3 scenarios, remember, either we are here, or we are here, bullish either way. Then when I look at the reaction from the blue box and I downgrade the time frame, I can see how from the wave 2 in red, that is because we're calling the extension in the wave 3, right? Because it's hard to call an extension into wave 1, but we're calling extension into wave 3 with the nest of 1, 2, 1, 2. And then when we look at the downside, in the lowest time frame, from red 2, we can make 1, 2, 3, 4, 5, A, B, C lower in the more conservative path, because we don't see yet the market ready to rally overall, and that will be providing a very nice buy in a dip to around 41.87, 34, 32 right here. That is gonna make Twitter into a triple nest, right, in the highest time frame, and this highlighted area can be 41.87. So at that stage for 41.87, we can have 1 in black and blue, 2 in blue, 1 in red, 2 in red, one in black, two in black. That getting back to the extensions, we have 1, 2, 1, 2, and we should be over here. So in our humble opinion, the board of Twitter, it makes a mistake in selling the company. I know that the sale hasn't been completed, it's to my best to my knowledge, but it seems like it's a mistake because the price in Twitter, it seems that it's going to stand using the Elliott Wave theory to new all-time highs, in which the next target to the upside, it will be the 100% extension from the lows in 2016, that it comes with a price target around 99.29. So it seems like Twitter is bullish, and it seems like the timing of the selling is not the best one, and it seems like the board saw Twitter when it was during an equal X. So maybe the buyer knows something about high frequency trader, because the timing was pretty well and pretty nice within the blue box area. Sometimes coincidence happens, but our technical opinion is that Twitter is going to rally, and that a buying around 41 can be something that can be held for the long term, right? That's our opinion on Twitter. So for more, if you want to see our work in 78 instruments around the world, visit us and take the 14-day trial. You won't lose anything, but a very good timing for the buyer in Twitter. I know a little bit about a high frequency trading, and very bad timing for the board selling when the stock was almost ready to rally. All right, so that's it for today. See you guys around. Thank you guys all.